We have with us Snehdeep Bohra, Associate Director of Corporate Ratings with Fitch Ratings. Snehdeep, appreciate you joining us today on ET. Now let's understand then your rationale behind this B minus that Future Retail's ratings have been assigned. You've also placed the company's instruments on ratings watch negative. Explain to our viewers the rationale.
Sure. Thanks, Mobina, for having me on the show. So as we mentioned in our press release, the rating action is mainly driven by the heightened liquidity concerns for FRL, mainly because of the high level of pledged shares at the promoter entity. So we feel that, because of these high pledges, the trigger of change of control in the bond documentation is quite high at the moment. So, as you sort of mentioned in our press release, nearly all of FCRPL's 41% stake in Future Retail is currently pledged. And given that the share price has continued to fall after that, there is like a very limited level of flexibility which the promoters have to sort of retain, this stake with themselves. And if the lenders sort of take any kind of adverse action or if they sort of take control of these shares, obviously the bond documentation sort of defines that the promoters have to hold at least 26% stake in FRL. So if promoters lose any, if the promoter's stake goes below 26%, then obviously, the change of control trigger will sort of happen, and that, the company, the bondholders can ask the company to redeem the bonds, which is like $500 million. And given the current liquidity situation, it will be a sort of, liquidity event for the company. Secondly, we also see negative impact of the coronavirus pandemic on the company's liquidity position over the next 3 to 6 months. So, while the company enjoys good banking relationships, obviously a default at FCRPL or any of the promoter entities, that will damage the reputation. And this development combined with the fact that their liquidity is already quite weak in the current in view of the current coronavirus pandemic, they will sort of require additional banking facilities. And if the reputation of the promoters sort of take a hit, then obviously they will face difficulties there, and the whole liquidity risk sort of gets compounded. So, all in all, it's like mainly driven by the liquidity risk which FRL is facing.
Okay, Snehdeep, now, there was a court ruling that provided an interim relief, for, I think, another 1 month, if I'm not mistaken, from lenders invoking the pledged shares of FRL. Now, we also understand that the promoters obviously evaluating multiple options to sort of reduce debt, free up the pledged shares, etc. So, if they're not successful in sort of being able to, monetize their assets or raise funds from somewhere to sort of free up the pledged shares, do you think we could find FRL in serious trouble as creditors then get back to invoking the pledged shares?
So the interim order stops the particular lender in question to take control of FRL shares till early May. And I think this will depend on, what kind of value the lenders are sort of seeing in FRL shares. So, the share price has sort of continued to decline, and while we believe that the business strength has continued to remain robust, if the share price sort of continues to fall, and if that leads the lenders to sort of have a rethink on the value which they see in FRL shares, I think in that scenario, they may want to, the negotiations may not go in the right direction. And, if the lenders in that scenario, if they decide to, let's say, sell the shares in FRL, I think that's when the whole liquidity risk will materialize. So I would say, while the company is taking various initiatives to resolve the debt situation at promoter entity, the whole situation is pretty much fluid, and I think there are significant execution risks given the whole coronavirus pandemic and also the decline in share prices. So that reduces their overall flexibility, and that's like a very big driver for our rating action.
Yeah, in fact, we had Mr. Rakesh Bayani just a couple of days ago, and he was talking about how he's allowed to sell only essential items and not non-essential items. And unfortunately, essential items carry really thin margins as opposed to, things like apparel, etc. So it's sort of a double whammy over there as well, because, the group is not being able to generate business, and thus, that as well will not be able to help them on reducing that leverage. What, according to you, would provide a trigger of any sorts for re-rating for FRL then from here on, Snehdeep?
So obviously, we would like to see the current debt situation at the promoter entity. So I think that's the main driver of the rating. And as I sort of mentioned earlier, we have placed the ratings on rating watch negative, meaning that there is a high likelihood of further rating action, and that is mainly driven by the vulnerable liquidity position of the company. So, we would like to see further clarity in terms of, the execution of various steps the company is taking to resolve the debt situation at promoter entity. So, it will all depend on that. So, let's say, once the liquidity situation eases at promoter entity, I think then we will have to sort of take a relook at the rating, considering its business strength as well as the, the new normal for the financial profile of the company. Given that the whole pandemic, this may have a sort of pretty significant impact on the our leverage expectations for the company over the next couple of years. So I think it will depend on that. So we are waiting for further developments in this regard, and given the high likelihood of further downgrade, we have put the ratings on rating watch negative.
The key fear, of course, is also the fact that the promoter shareholding could drop to 26%. That would basically lead to change in management of sorts. Remember that it's FCRPL, that's Future Corporate Resources Private Limited, that essentially holds a big chunk of Future Retail, and because Future Retail's share price has been falling, FCRPL's has been demanding more shares as collateral. So now nearly all of FCRPL's stakeholding in FRL is pledged. Lenders did attempt to invoke that pledge, but the court has granted an interim relief for the next 1 month. Meantime, promoters obviously are scouting for cash, with business as well being on a lull thanks to coronavirus.